Welcome back and well done if you've made it to the end of this series. So we're now at the final syllabus area, which is syllabus section F, and we're looking at ethics, in particular ethical threats. Let's go through those. Self-interest. So you're auditing a client and you might have some self-interest. Well, how can you have some self-interest? Well, maybe you own some of the client's shares, so you want them to do well, so you won't give them a bad audit, will you? Self-review. Well, you're not likely to criticise yourself. So if you've done your own work on behalf of the client and then you're auditing it, that's self-review. You're not likely to audit very well, are you? It could be that you're an advocate for your client, i.e. you're speaking on behalf of your client in court. Well, you shouldn't. As an auditor, you should be independent. So again, that would be an ethical threat. Familiarity. You know each other too well, so you don't want to give them a bad audit report, so a really close friendship. And finally, intimidation, where the client intimidates you, so you get threats from the client management, so you want to give a good audit, otherwise they break your kneecaps. So that would be an intimidation ethical threat. So there's 5 ethical threats. Let's see how this was examined though in 2024. So it says, speaking on behalf of an assurance client in a court, would that affect, is that a threat to your ethical behaviour? Yes, it's an advocacy threat, isn't it? What about if we audited a client's non-current asset register, which we prepared for them the previous financial year? Is that an ethical threat? Yes, because we're auditing our own work, self-review, so yes it is. Okay, that's how it was examined. Let's have a look at a similar exam question as we always do from accountancy.com. Here we go then. An accountant owns shares in a client company. Which threat is that? Is it self-interest, advocacy, familiarity, or intimidation? Hopefully you know it's a self-interest threat, because if we give them a bad audit, the share price might go down. So we think it's self-interest, and indeed it is. Financial conflicts like share ownership directly create a self-interest threat under the ACCA ethical code. Well done for getting to the end of this little series. Hope you enjoyed it, and we'll be doing more on other examiners' reports. So good luck for your ACCA BT exam.